much. Welcome everyone to another Leadership Greater Washington Frontline conversation. We are thrilled to have David Gardner with us today. He is the co-founder and, as he likes to say, the chief rule breaker and the co-chair of the Motley Fool, which he founded in 1993 with his brother Tom. David, how are you? How are you feeling? How's your health? How's your family's health? How are things going with COVID?
Doug, we are all healthy, which is what counts most. And we've had a lot of adult kids hanging out with us throughout 2020 into 2021. So we've had some amazing family time that we never expected. I'm really happy to think about the health of our employees at our company. We've grown substantially during COVID. So the company that shut its doors on March 6th, Friday of last year, and all of a sudden, my incredible brother, CEO Tom Gardner, said, "Hey, we're all going to not come back to the office on Monday." And I don't think anybody else was thinking that at that time. We were very early, but that company that closed its doors that day, which had about 375 employees, is 525 now, Doug. So we've hired 150 people throughout the last year, and most of them have never met a fellow Fool employee face to face yet. And so the company that will reconvene is going to be fundamentally different from what left in March of 2020. How are you doing?
I'm doing well, actually. I'm doing
You look
very
great.
well. My wife and daughter got vaccinated yesterday, so I'm very happy about that. So
Wow.
I haven't yet, but I'm hoping to get it soon. So
How did they pull that trick?
they work for a senior living facility, so they're part of 1A, 1B, whatever,
Makes a ton of sense.
in Kensington. So they were able to get that.
Good
So one of my concerns about COVID is hiring people in a virtual environment. How do you bring them in? How do you train them, teach them about the culture of the organization? And you have such a distinct culture at Motley Fool. What's it been? You added 150 plus people
Yes.
in the last 10 months? What's that been like? And how do you acclimate them to your culture?
Well, I think, first of all, we've tried to do as much as what we did before that worked as possible. And so for many of them, I've had a new Fool coffee with them, maybe 5 or so at a time throughout a lot of last year. And that's exactly what I'd always done before. Certainly, the core values of our company are the same. The job that they're being asked to do is what they were hired for. So a lot of those things persist. But then the things that are different, well, for many of them, as I mentioned, they've never actually gotten to be face-to-face with anybody that they're working with. Fortunately, some come already knowing a lot about the Motley Fool, being aware of our culture and sort of already being up to speed. But in particular, Doug, we've been starting to hire anywhere. So even though we are an Alexandria, Virginia centered company for 27 years, we opened up our Foolorado offices about 7-8 years ago. So we started to get used to being a virtual distributed company. But now you can work from the Motley Fool from one of 17 different states, and we're working on the other 33 and permanently. So my brother has said anybody can take their family anywhere that they want and continue the job that they're doing. So that's probably very attractive to people who are now our new employees in California and Texas, et cetera. So I would just say we're figuring it out as we go. In a lot of ways, it's the plane that we're building as we've been flying it all the way through. And especially this last year, our 28th year of business, it's just been an eye opener. And we're just trying to do the best we can. Yeah.
What's amazing to me, though, is that reach that you just described, where you can be anywhere, not just in the country, but anywhere in the world, and still continue to perform, still be productive at the job, and still get the job done for your employer. And we found that with Leadership Greater Washington, where a lot of our, all of our events now are virtual. But what we're seeing is that we have people from around the country and around the world tuning in to what we're doing, tuning into these frontline conversations, tuning into some of our member dinners and things like that, where we never could have gotten them before. So it's really opened us up to a lot of our members who have left the area for some time.
Isn't that an incredible opportunity? And, the concept of anti-fragility, some may have read Naseb Salim's book, but basically trying to, when things get tough, be even better than you were before they got tough. It's not an easy thing to do, but it's the right hat to be wearing. It's the right lens to be wearing as we think about our organizations as leaders. And I know there are so many people. What I love about LGW are all of my friends, civic leaders in and around Greater Washington, doing all kinds of different things. So it's a challenge to all of us. And I love that there's an audience that's outside of Washington hearing us now. a challenge to all of us to ask, how can I actually make this time better than it would otherwise have been? It's not an easy question to answer in many cases, but it's the right question to keep asking.
That's something that we focus on. Our chair, Mahan Tavakoli, really has pushed this anti-fragility message to us. And frankly, I think we are better than we were before. We're offering a lot more programming. It's a lot more substantive programming. And we're providing much more value to our members than we had before we had to go virtual. So it's exciting. It's a lot of innovation, a lot of creativity. It's very exciting to see what we can do to help our members feel appreciated and to give them value for what they're looking for from us.
Yep. And I know the anti-racism seminar course that you all have been running now in its second iteration. I hope I'm not giving away the goods here, Doug. I hope this wasn't proprietary information, but I believe you have more people signed up paying for it that are not members of LGW than that are. And that's been an incredible sign of growth.
That's been great to see. And doing these things virtually really has allowed us to sort of go beyond our membership and open us up to a lot of other people who want to learn about LGW or are interested in the topics that we're presenting. So about 30% of the people, of the 300 people who are signed up for this anti-racist leadership series are members, 70% are non-members. So that's really good to see. I mean, it's very gratifying to see that.
That's a great sign of anti-fragility. And I know Mahan is a wonderful leader, and for him to be playing that up and then demonstrating it, there's nothing like actually walking the walk after you've been talking the talk. So that just sounds great to me. And I know all of us, especially LGW members, lifetime members, just want the best for this organization and want it to grow and keep spreading its wings and reaching more and more people. You know, I loved the article today in the Washington Post with my classmate, Lynn Lightfoot, being highlighted, the efforts that she's made as an obstetrician and a woman of color, and how meaningful that is for mothers, expectant and delivering mothers who are also of color, to have that bond and that connection. And Lynn is just such a gifted and talented person outside of being a doctor. But these are the kinds of people that I've gotten to meet through LGW who've enriched my life. And I'm just trying to share it back whenever I can. If there's some fool thing that I can do to make things better for the world, I'm here to do that too.
So Lynn Lightfoot is a great doctor. She's a great member of LGW, and your class of 2019 is a really special class. It's a great class, and I get in trouble because every time the class of 2019 comes up, I make that statement that it's a great class, and people don't want to hear that, but it's an extraordinary group of people. So I'm very proud to be affiliated or associated with you all.
Thank you.
Let's talk about Motley Fool. You have just started a foundation. How's that going? And what are your hopes with that?
Yeah, so the Motley Fool Foundation is our effort to do something not for profit. I love doing things for profit. I'm very grateful that there is profit in this world, especially since part of our business is me picking stocks. And I'm looking around constantly asking, what are the companies that you or I should be invested in, whether it's Zoom. Over the last few years, we've seen how well that's done, or longer term great performers like Netflix or Amazon. These are all companies that create profit. And the Motley Fool,
and the purpose of Motley Fool is to make people, if I remember correctly, smarter, happier, and richer.
You got it, Doug. Thank you very much. We're a very purpose-driven organization, as I know you all are too. So I love profit, but the truth is that it's probably a failure of imagination, but we can't turn a profit with everything in this world. If we could, those things would be more sustainable, but it's hard. So for us as a company, we can reach people who want to figure out what the next stock is they should buy. So that's probably somebody who has money saved and is ready. There are a lot of people who are not in that position in the world. And I wanted the Motley Fool, and Tom, my brother, wanted the Motley Fool, and Jennifer Oxley, our executive director of the Motley Fool Foundation, wanted our company to be relevant to all of those people too, the people that we want to welcome to the campfire, to be able to tell stories, new stories than the ones we've heard. The stories that we've created around our campfire are ones of prosperity by buying and holding great companies and being a Motley Fool member for 15 or 25 years. And we're getting testimonials back every day that are incredibly moving. But it is a narrower section of the world at large that is actually writing those testimonials. It's much broader than it was before, because I think the Motley Fool democratizes the markets. I think that's what we've done. We're Main Street, not Wall Street. That's always been our positioning. But again, the truth is that there are a lot of problems in the world, especially for financial literacy, that just have to be fixed before people can buy a stock. So the Motley Fool Foundation is, we have our board, we've got our executive director, we're meeting with our members now. We're hearing what is the best way to approach systemically unlocking financial freedom for all. And so that is the mission that we're on, Doug. I hope it's a big mission. You know, I think about the Gates Foundation. They're about the health of the world. I'd love for the Motley Fool Foundation to be about the financial health of the world. So we're starting from a very small starting point. But then again, that's how the Fool started 27 years ago. And we've watched the acorn turn into at least a shrub, if not yet an oak. So we have experience growing things that work. And I'm so excited about this outreach and this effort.
You know, we have a family connection. My sister Monica went to college with the brother Tom.
Excellent.
Brown University. So they knew each other. Well, they know each other. They knew each other back then in college and know each other now. So.
Yeah. Tom speaks very well of Monica. Does she speak well of Tom?
Absolutely. Absolutely. So you've embarked on something recently of trying to educate us in not just in financial literacy, but in conscious capitalism. And talk to us about that. What are the guiding principles behind that, and how can we get involved with that?
Thank you very much, Doug. Yeah, so conscious capitalism is a movement that is deeply meaningful to me, and I'm on the national board because I just want to be helping it. Conscious capitalism is based on 4 simple tenets. And the upshot of it is that business, when done right, is a beautiful thing. It elevates humanity and creates lots of solutions. A lot of us know the bad forms of business, extractive businesses, the Ken Lays of the world, you know, the Enrons, the bad things out there get the headlines a lot of the time, but miraculous work is done every day for profit in good ways by great companies like Chipotle, which even though it'll have its critics, as does Starbucks, these are companies that are like, Starbucks is putting its baristas through college, like way extending beyond what you'd expect from, you know, corporate Inc. these days. So conscious capitalism, Doug, real quick, purpose over profit, higher purpose. That's what we're driven by. The profits will come if you're serving your purpose. Number 2, managing for all stakeholders, creating a win for everybody. The biggest problem with 20th century capitalism is the concept that it's there to maximize shareholder value. That was taught in business schools. It was in the Fortune 500 CEO letters that they'd write in their annual reports. We're here to maximize you, the value for you, our shareholders. But that creates a lot of imbalances and unsustainability and short-termism. The great companies manage for all of their stakeholders. So their customers, certainly, otherwise, why are we in business, right? But your employees that make it all happen. Love and support your employees. How about your partners and suppliers? They all want to be in the front window. You can't do that for all of them, but you can treat them well and respectfully and in a mutual win-win way. And then how about the environment for some companies, or others, the local community? Every business is different and has a different set of stakeholders, but the great CEOs, and my brother Tom is one of them, manage for a win, 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 a win for everybody. And that's that stakeholder capitalism that is so important in conscious capitalism. The last 2 are conscious leadership, which you're a conscious leader, Doug. Servant leaders in this world, people who understand the real meaning of leadership and who realize, importantly, that their level of consciousness, their organization will never grow beyond that. So we as leaders, and I'm saying this to all of us, regardless of where you are in life, those around you and the organization that you serve will not be able to grow unless you make sure you're growing and you grow. And so I think a lot of us have been challenged during a year of recognizing systemic racism and then COVID, et cetera. We've all been challenged. And point blank, are you growing? And how are you going to grow? And how are you going to change? How are you going to make it better? So that's such an important part of conscious capitalism. The last one is conscious culture. I think the Motley Fool is a great local example. And we've been recognized nationally as a company that people love to work for and are highly, highly engaged. And we could talk later about why that might be the case or what works. But those are the 4 tenets of conscious capitalism. I feel so strongly about it. We started our DC chapter. So Washington, DC, conscious capitalism, just Google conscious capitalism, DC, and you'll find our chapter. And I look forward to doing more with LGW, because boy, does LGW get it. There's so many great business people I've met through LGW, and then so many other leaders who recognize the importance of good business in your town. So as a native myself of this city, I'm delighted that we have some conscious capitalism going on in DC.
So are there other chapters around the country, around the world, or are you one of the first, or?
Yeah, we're one of the largest. I think there's 65 chapters for conscious capitalism. That includes around the world. I did a big keynote virtual for Berlin last summer. So I mean, there's growing awareness that this is the capitalism that serves all is a conscious form of capitalism. And again, you know, if you're a leader, right, every customer wants to pay less. Every employee wants to get paid more. Every partner and supplier wants to be in the window. Your shareholders, by the way, would like you to double their money overnight. And so as leaders, we have to figure out, I don't think we can trade those things off with each other. One thing's for sure, we can't take one group and say, hey, we're here to maximize it just for them. You know, just the shareholders, everybody else is just subservient to that. It just doesn't work. So we creatively problem solve for win-win-wins if we're doing the best job we can as leaders.
So if I could talk about Panera Bread just for a second, they had a mission, or their mission still is to help end hunger in America, to feed America. And they had started in major cities, I guess they have 5 of these, opening up stores where it was pay what you can.
Exactly.
So you could go in and get whatever you want. If you could pay nothing, pay nothing. If you could pay more, pay more. And I actually called them and talked with them about, hey, can we do one in DC? It was right after I was hired by LGW. And they told me at the time they're getting away from that they didn't think that reached enough people, that it was too intensive to do that. So they moved more towards the Feeding America model and supporting them. But I was really proud of them to see them at least initially take that step. I'm sorry we couldn't pull off something for the district, but
yeah.
But those are the kinds of companies that we're looking for. Yeah.
Very much. And I'll say, I can't speak to that particular situation because I was aware of it. And Panera was a wonderful winning stock for Motley Fool members until it got bought out by a private equity firm. And that might be part of the reason the policies changed. You know, Ron Shaich, who is the founder of Panera, is certainly a friend of mine and also on the board of Conscious Capitalism, is just a wonderful, you know, heart and soul kind of a guy who he invented this concept that, hey, you can come into Panera and pay what you want. And for some people who didn't have a home to sleep in at night, they might not pay anything, but you or I in line might pay double to make it happen. And in general, I think that it worked. They were sustainable, but I don't think that they grew enough, maybe alongside all of the others. So the problem was the model didn't scale as well as maybe they hoped.
Yeah.
But I don't want to speak for Ron because I don't actually know the end of that story. And ultimately, Ron sold Panera and you know, it was kind of a sad story. The same thing kind of happened to Whole Foods. Activists are going after certain corporations, trying to make them lay off half their people and become efficient overnight to double the money that the investors could make. And so it really can mess with the cultures. And in the end, I think that's what we are as leaders, by the way. We're culture builders. I mean, LGW has a rich culture, 30 plus years of leaders who are just spread out in the area. And even though I'm just class of 19, I've been connecting with people in other classes because they're out there and we're all kind of networked together, and you all know that and you make it happen for us, but it's a culture. And so I'm always looking for cultures when I pick stocks. And so we're all anthropologists as leaders of our own cultures and of what are some cool things other people are trying out.
So we've got a question from our chair, Mahan, talking about culture. That you're great with culture. The Motley Fool is great with culture. You and Tom are. And you've got people everywhere now. But what have you lost by spreading out that way? And will you ever bring everybody together again? Or are we going to still be separated for some time? Yeah.
So I know one thing, we're not going to be opening our physical offices until at least August, because Tom, who makes the calls, he's our CEO, said we're going to be the first to close and one of the last to open. It serves us pretty well because we are a business that does not need to be in an office, turns out. We can all be in our dens, in my case, with a lot of board games over there. So, you know, which makes me happy. But the truth is, ultimately, there is a hybrid model that's going to be much more efficient than everybody doing Zoom or nobody doing Zoom, right? So I think that we've all learned that this has a place. Right now, we're all leaning hard on being hunkered down and physically distanced. But I think there's no question that we're starving. I anyway am starving to get back and with my fellow humans and my fellow fools. And so I think that you know, what our space needs are is still unclear to our leadership. I believe it's going to be different from what it was before. It might be more that rather than have David Gardner's desk, we're going to have, that's a desk, and David can have it if he claims it for this period of time. And some people want to be there every day, and some people will not come in for a month. And we've already said ahead of time, that's okay. Literally, if you want to work for our company forever from your kitchen, you may. As long as you get your job done, that's your call. So that's totally a new policy for us. And to Mahan's question, I think something is certainly lost there. The collegiality, especially the water cooler conversations that wouldn't happen otherwise. I'll give a quick example. One of our employees gave a tribute online, of course, to another of our employees who just celebrated his 20th. We call these Fooliversaries. So his 20th Fooliversary, and the note was, if we had not been working next to each other, we weren't on the same teams at all. We just happened to be near each other. I would never have been your friend over these last 20 years. And so I'm so grateful that we had that water cooler opportunity so I could be your friend for 20 years. And so that's missing, right? That's missing. You're not a water cooler away from anybody on Zoom. So I think that's what I really think we need to thread back into our culture, and we will.
We've got a question from Karen Kalish about the diversity of your hundreds of employees. What's that like? What are ways for them to work their way up once they've been hired?
Great questions. Yeah, I definitely wanted to talk some about this. I'm just thinking about the anti-racism series that you do. This is such an important thing for LGW. And let me just say that I'm very happy with the diversity that we show in many different measures today as an organization. We are much more diverse than we were 10 years ago or even 5 years ago. For the last several years, pre-COVID, pre-2020, the Motley Fool has had an majority female board of directors. That's a good example of some of the diversity that is so important to us. And we love the word, by the way, motley. It's right there in the middle of our name, Karen and everybody. And that in a world where diversity almost has been trying to mean too many different things and be a panacea, we've always loved the nature of motley, which is more about pluralism and unity. And so, motley, of course, was the garment worn by jesters of yore, a patchwork quilt, many different colors, shapes, crazy looking stuff. So that's motley, and it really works well for a company like ours, which so values diversity. I did want to mention, though, that we're always looking to further diversify ourselves. We don't have this sense that we look like every man, but that may not be the right term because it's gender specific. But the every fool company in the world. I don't know that we have that much religious diversity at our company, for example. There are many forms of diversity we will probably gain. We are more international today than we have been before, but we had an incredible all hands meeting in the middle of last year where we had some of our minority employees in different forms. I'll give a quick example. One of our Black employees in this case, who just had written out his story so everybody could hear it, and it was not read by him. Our people and culture team said, what's even better is if somebody who's not him reads his story. And that's especially meaningful, I think, because if you are a minority in any context, there can sometimes be a burden that you feel that you have to represent. And then it's all on you, and it's kind of centered on you. And so I thought it was an incredibly capital F foolish touch to have somebody who is not Black read out front of everybody that person's story. So I think creating space for people to let them feel, you don't have to have an opinion, but just allowing feelings for people to process have been really an important part of what we're doing. I want to say something else if this topic comes back, I have something more about it that we're doing specifically for 2021, but I also don't want to give lots of long answers when we have good questions coming in.
We've got a couple questions about the stock market. One is, can you talk about the GameStop stock story, what it tells us about private equity firms and how they're seen in society today, and
Sure.
What can be done to shift all capitalism into a more conscious form of capitalism?
Sure, I can. Yeah. I mean, as regards GameStop, I would say I'm looking forward to the game stopping. A lot of people may be aware, but I won't assume everybody is here. So you should know that what can happen with penny stocks, which is that somebody comes to promote a penny stock and they could use the internet to do it. And since it's a penny stock, it's a tiny company. So if you could just get enough people to be aware of it, if they start buying, it can drive the stock price up crazy fast in an unsustainable way and in an undeserving way. And so that's always happened with with penny stocks, and there are whole boiler shops. There are Wolves of Wall Street movies have been made about this kind of thing, pump and dump. But what's happened just in the last week or two is that a larger group of people, not just doing this with penny stocks, but instead doing it with bigger companies. Now, kind of down and out companies like GameStop, in a world that's moving away from bricks and mortar, and you don't have to buy your PS5 at GameStop anymore. And you don't even have to buy your games physically for your PlayStation 5 anymore. You can just download them. So GameStop was not in a good place as a business, very vulnerable. But so people came in and just started saying, hey, buy the stock, you buy the stock, I'll buy the stock. And you know what? Other people are betting against the stock, and those are the institutions, those are the hedge funds. And so they have short positions. I'm not going to explain all of this. Some of you, I hope I'm being coherent enough. So there's a battle going on between those who think the stock should be going down and those who are going up. But the ones who are going up are working in a concerted fashion with tactics to cause these stocks to go up an insane amount. So GameStop, as of just a few months ago, was at about $7 a share. And it was over, and as of about last week, it had jumped to 20. And today was at about 350 at one point. I'm not following the markets because I'm talking to you right now. But I mean, we're talking about something that is insane. GameStop is worth more today than at any point in its history, even back in its heyday. It's obviously not sustainable. And I don't really preoccupy myself with this because I'm just focused on the long term. And this is short-term games and shenanigans. It does point to some of the systemic weaknesses in the market and some of how we probably regulate the market. And the SEC, I know, is going to take a hard look at this. So, I mean, there's some gleeful craziness about it. I mean, it brings smiles to some people's faces because it's so ridiculous and it's real. But ultimately, it's a sideshow, and it's not something that I'm going to spend much time with, and I'm certainly not going to participate in it. Quick shot.
So do the stock market's new heights as the pandemic stretches on surprise you? And what are some of the ways the U.S. can close the gap between the top people profiting tremendously while everyone else is struggling?
Well, first of all, I think, our goal is to get everybody invested in the market. And a lot of people are invested in the market, even if they don't know it. In your 401k plan, if you have an index fund that has stocks like an S&P 500 index fund, you are also invested in the market. Of course, not everybody is. We wish everybody would be. And that's the foundation that I mentioned earlier. We'll be working toward that. But I have to say that a strong stock market is good for America. I think there's no doubt about it. I want our stock market and our business world to be the best in the world. And I believe today that America is the true center of best business practices, most innovation, and most of our great companies are global players. Like, everybody's Googling stuff around the planet, and that's an American company. And Netflix, the leader in streaming, that's an American company. We so benefit as Americans from that kind of leadership. And I would say conversely, even though China is often portrayed as it's going to be their century, they're going to take over. I don't see us using their brands. I don't see as much global outreach or innovation from them. But in the end, I want the best for them and for us, because we all benefit when anybody can lift it for everybody else. So I'm just so happy that the stock market has recovered. There certainly has been a divergence, Doug, between companies that are digital and that can roll in this kind of environment and actually accelerate. A great example would be Zoom, what we're using right now. This has been an incredible stock pick for the last few years, and I very much believe it for the next 10 years, right? So that company's doing great, and Macy's went bankrupt. And there's just all kind of bifurcation between the digital players and the non-digital players. So ultimately, when the market went down 35 percentage points in 32 days, just 10 months ago, that didn't feel good at all. But for it to have bounced back has certainly surprised me. But I also have benefited from it and have tried to get as many people to benefit from it as possible. And to close the shaggy dog answer, we're trying to get as many people invested for as long as possible and as early as possible in their lives. So even if you feel like you're getting a late start, get your kids started, because bring as many people along with you as you possibly can. That's the theme of, I have a podcast, a weekly podcast. That's my title today for the Rule Breaker Investing podcast. That's a big focus that I have, is bringing everybody else along and making everybody feel included. And that's certainly true in the stock market.
So we have a question from Doug Dameron. Any stock decisions you've made lately that you wish you didn't make?
Sure. That's a great one, Doug. I mean, speaking of my podcast, the first week of every year, and it's now 6 years running, I do my 6 worst stock picks over the previous 3 years. So this is fresh on my mind because I just did it a few weeks ago. And yeah, there are any number of bad stock picks that I've made. And it's a really important lesson because losing to win is one of my big themes. So I'm sort of like a venture capitalist in the sense that I'm willing to lose. I'm willing to take some extra risk, place down my bets, and know that some of them are not going to do very well. So a quick example, just scanning through recent picks in the last few years. I haven't done very well with iQIYI. iQIYI is a Chinese company that's the Chinese Netflix. That one is down. It's been cut in half in the last few years. So that's a company that many of you may not know. I was hoping that you would know it because I was hoping it would succeed far more than it has. But it's sort of like a YouTube Netflix of China, and it hasn't worked out that well. And I'm certainly not putting it out there as something anybody should be buying today. In fact, typically with new money, I'm always trying to add it to my winners, not to my losers. Let's whatever's working, let's add more to that. I'll give one other quick example. Hawaiian Airlines. Hawaiian Holdings has been a bad stock pick of mine, down 38% since I picked it in January of 2019, 2 years ago. You may have noticed there aren't as many planes in the skies these days. And the bad news, good news for me is, well, the bad news is that I take my lumps and I take more than the average share of them as a stock picker. But the good news is that I'm patient. I'm playing the long game. So I'm not going to react badly to what happened last week or even 2 years ago. I've been invested for the last, well, I'm 54, so 36 years since I took over my account at the age of 18 that my dad had set up for me. And I hope to be doing it 36 years more. So I hope we're all as leaders playing the long game. So I'm really not going to get too taken down by the dogs out there. My best stocks have literally wiped out all of my losers combined. Like a single stock like Netflix has taken out all of the losers that I've ever picked at Motley Fool Stock Advisor. And I've been doing that over almost 20 years now. So when you have a single stock that can wipe out all of your losers, you are happy to lose quite frequently to make that trade-off. So that's my own unique style. It's not true of everybody out there, and I'm not promoting it. I'm just describing me and why I kind of love losing in a really painful way.
But you call it losing to win.
Yeah. And that's a big theme for me. That's a big theme.
Yeah.
I mean, let me give one more minute on that because this is a profound lesson and I like to illustrate it for people. So, psychologists tell us that the pain of loss is 3 times the joy of gain. That's just hardwired into our humanity. The pain of loss, 3 times the joy of gain. It's the exact opposite for the stock market. And so if you can actually inculcate that take that upon yourself and make it, internalize that, you're going to be a much better investor because in the stock market, the joy of gain is actually infinite times the pain of loss. Many people live in fear of ever having a stock lose half its value, or they'll buy a Motley Fool service, buy the first stock, and it goes down 10%. And they're calling us on the member services phone line going, what do I do? Do I sell? I'm down 10%. I wish I'd never signed up. But here's the mathematical truth. In Motley Fool Rule Breakers, which is a service I've been picking 2 stocks for every month since October of 2004. So that's over 360 picks monthly, month in and month out, good times and bad, great financial recession, COVID, all the way through. I have picked, this is horrific, Doug. I have picked 63 stocks out of 360 plus that have been cut in half or worse. Every one of those, I thought at the time, I like this. I'm recommending it. This is my pick this month. Let's go with it. And a lot of people have lost a lot of money on those picks. And I do greatly regret that because every one of them I hate. Here's the good news though. Of those 63, let's now go to the winners. The 63rd best pick that I've made in that service is Zillow, and it's up about 467%. So if you're doing the math here with me, so you have 63 stocks down somewhere between minus 50 and minus 100. I've actually never done minus 100, right? But our 63rd best stock is up plus 460 something. The best stock, Mercado Libre, on its own wipes out all 63 of those losers. And that's the best stock. There's 62 below that have all done wonderfully. So I hope you're recognizing the math of this. You're going to take a plus 463 and lose a minus 70 every time, even though the world lives in fear of ever losing 70% on a stock. So it reverses psychology that's hardwired into us. And so if you're willing to be foolish and be contrarian and really wire yourself that way, it makes so much sense, and it really, really works. So that's my story.
So do you apply losing to win to things outside of the stock market?
Absolutely. I mean, don't we all need to take risks? Isn't that what life's about? And it wouldn't be a risk if it didn't work out a fair amount of the time. So this is, for me, like a lot of things, lessons we can learn from investing also apply to us in our organizations and our cultures and our businesses, and of course apply in life as well. And so I'm somebody, well, real quick, I've got a lot of board games here. If I start spinning my computer around, you'd see I have even more than that. I love games. But here's the thing. At the geeky age of 54, most people have outgrown games. I'm not one of those people. But generally, people would assume I'm probably really good at games. After all, if somebody's still playing chess these days as an adult, and I'm not actually a chess player, but if they are, they're probably really good at chess. That's why they're still playing. But I'm actually the opposite. I regularly teach these games to friends and family. We've played a lot in the last year. And then the person that just learned from me beats me. And so I have somehow found peace around the idea that winning doesn't matter nearly as much as playing the game. And the social benefits and all the rest are a separate benefit as well. But so I think that you have to be willing to lose to really win in the biggest way.
We have a question from Lance Ford. Any thoughts on the cyber currencies that are out there?
Sure. I mean, I find it interesting. Talk about a local story. I don't know how many people follow MicroStrategy, which is based in Tyson's Corner. It's one of my stock picks in Motley Fool Rule Breakers. It's one of my winners now because Michael Saylor, the founder of that company, started to buy Bitcoin with the balance sheet of MicroStrategy. So MicroStrategy is a business intelligence software platform company. Has nothing to do with cryptocurrency. But Michael Saylor determined that it was worthwhile to do this. So they started taking their assets, their cash on the balance sheet, and just buying Bitcoin. And take a look at ticker symbol MSTR if you want to see a stock that has crazy vaulted upward over the last 8 to 12 months. In a way, MicroStrategy is less now a business intelligence software company than a bet on Bitcoin. For my own part, I would not make that bet myself, for better or for worse. I just prefer sticking to my knitting, and my knitting is finding great companies and buying their stocks and telling other people to buy them along with me and holding them way past when most people hold stocks. We hold stocks for decades, not months. And so that's the approach I take. So anyway, MicroStrategy is a really interesting local story that's making a huge bet on cryptocurrencies. I think the technology is really interesting. And I think there's something fascinating about a store of value that is not a fiat currency of a nation state. That's a really disruptive, really interesting thing. So I think it's worth following. But since they're currencies, a lot of them, they've failed in that regard, haven't they? We're not really paying much. Anybody, I haven't with Bitcoin or feeling like I need to. So I think Bitcoin is not so much a currency. It's like gold. It's a speculative store of value. And in general, I don't want my dollars there for the long term. Gold has not been a great investment over the last few centuries. You do much better just owning common stocks.
Isn't MicroStrategy sort of the classic example of staying in there for the long haul that you recommend? Because they were way up and way down.
Absolutely.
Now they're way up again.
Absolutely, Doug. And, there are many stories like that. And I wish that those stories were told more frequently. I'm glad that you know that one. A lot of people probably don't know what MicroStrategy is. But I see it in stock graphs, right? I just love to look at the 25-year stock chart for a company because there's so much narrative in those zigs and zags that people may not know or appreciate. But ultimately, if it's like the American stock market or like Amazon or all of the best companies of our time, it goes lower left to upper right. It takes a while to get there, and there's some crazy times you have to live through, but it's so important to think about resilience. And I know you're somebody who's very broad-minded because you come from a public sector background, but you have a lot of private sector in you too as well, Doug. And so it reminds me to say that, resilience for me is actually one of America's core values. And that question about, I especially think in light of the inauguration this month and last year, I've often thought, we do core values for our organizations. Like we know it for the Motley Fool. You know it for LGW. And I can look up the core values of most of the public companies that I would recommend today. Look at their purpose, look at their values. The conversation I'm excited about is what are America's core values? You know, if you were to identify 3 to 5, and so rather than have a spitting match with somebody who doesn't look like you, who may have totally different viewpoints, the commonality of saying, well, what are the values that underlie America? And for me anyway, to show my cards, one of my 5 that I think we have is resilience. And so I love to see resilience play out. I think it's happening all around us at all times. Personally, professionally, certainly corporately. You gave an example of MicroStrategy, and for our nation. I mean, what an incredible, resilient nation we I hope never take for granted.
You got another question that if you were advising a young person starting out, as you were at the age of 18, where would you send them to start?
Yeah, I would say right away. Well, first of all, get educated, get up to speed. I'm not trying to promote the Motley Fool here. That's not the purpose of this conversation, but certainly fool.com, among many other places, has great free resources. We have the 13 steps to investing foolishly. You can Google that, spend one night reading them, and feel like you have that grounding or that education in money that you may never have gotten before. And we try to speak in plain language. But again, there are many resources like that. But I would start there. And then as quickly as I could, within days of reading and processing and figuring out who I am at the age of 18, I would take my first dollar saved, and I'd make sure I have a dollar saved, and I would open up a brokerage account, and that's free online. That's really easy to do online these days. So simple. Robinhood is an example of an app a lot of people use, and I would invest that. And 2 small miracles have occurred for the 18-year-old in the last 18 months, largely unreported. But you're probably aware. Most people who are aware, but a lot of the world is not financially aware, so they don't know that there are no more commissions for the most part on buying and selling stock. So when I was growing up and when I was 18, you had to pay like $50 to a broker to buy some shares or sell some shares of a stock. That has declined basically to 0 today through Schwab, Ameritrade. Others have basically brought the cost of transaction to nothing. That is one small miracle. I could never have expected that. That's amazing. The second is you can now buy fractional shares of stock. So for example, people see a stock like, I don't know, let's take Zoom today. Zoom is, as we speak, it's somewhere, let's say it's around 400. I'm making that up because I'm not looking at the market, but that used to mean you had to have $400 saved to buy a share of Zoom, or $3,000 saved to buy a share of Amazon. No more. You may now buy fractional shares. So you could buy 1/100th of a share of a company like Amazon and pay $30 and have that $30 invested at no commission. So put those 2 things together, no cost of transaction, buy anything you want fractionally. And you could have a diversified portfolio of 20 stocks with your first $100 and just grow it from there. And the reason I want that 18-year-old thinking about that is because of math. And you know this, Doug, math, it compounds upon itself. Positive returns. The stock market on average has returned around 10% a year. Type it into a spreadsheet, do the math, do it over the next 40 years. What does 1.1 to the 40th power do? It's amazing what those first $100 can do for that 18-year-old in about another 40 years. I've seen it personally. I know it. And so many Motley Fool members know it. So we're all about carpe diem. Gather ye rosebuds while ye may, get invested as quickly as possible. Get on the train at the first stop.
That's great advice. I wish I took that advice when I was 18 years old. But anyway, we're having fun.
But you know what? You're connected to many people who are around that age. And so we can all let them go and get them going. And, you know, I will say we've seen more interest in investing in the last year than at any other year of our history at the Motley Fool. And there have been some market heydays like the .com boom back when we were mainly just an AOL company. So I've seen lots of interest, but we've never seen interest like we've seen in the last year. And some of the incredible gains that we've seen in companies inspire people. I also want to make sure we're all playing the long game. Market could sell off this year. We could be down 30% in the next month. I'm making that up. I never predict the market. That's not how I invest. I'm just finding the great companies taking a little bit of part ownership and holding it there for 30 years. I think everybody should too. So even if you and I, Doug, at a more advanced age, can look back with some regret thinking, wish we'd started earlier, we can get so many people started still today. And there's interest out there.
So you mentioned Robinhood. We do have another question of how do Robinhood and Acorn differ from the Motley Fool?
Well, I would say that I know Robinhood a lot better, so I'll just speak to it briefly. Robinhood, more than anything, is an app on your phone that's a brokerage account. So it's kind of like opening up an account at Charles Schwab, except that Charles Schwab isn't as hip hop cool with the app crowd. And so I think that Robinhood has done a great job positioning itself as a mobile way to invest. And there are mixed messages here, and has made it fun. So there's been a little bit of gamification, which up to a point where you're having fun as a fool, I think is good. But if it starts becoming gambling or silly stuff like what's happening with GameStop today, which is a true extreme, then of course I'm not a big backer or believer in that. But so it's a transactional platform. The Motley Fool, you can't buy stock through us. We are an advisory firm. We provide the advice that you would use to trade, to buy a stock on Robinhood or Fidelity or wherever.
So Beverly Hudnut has a question. What has been your best return on investment from being involved with Leadership Greater Washington?
Oh, that's a wonderful question. Thank you, Beverly. I joined, and we all talked that first week, that first retreat. Why are we here? What are we doing? And I said quite sincerely, and I say the same thing today, I just want to make some new friends. And that really is what Leadership Greater Washington has given me, far beyond what I could have ever expected. Starting with my 62 fellow classmates, each of whom is a friend, with each of whom I have a connection or a memory. And many of them I still have active conversations with, especially my Mind Trust, for those who know the language that we're rocking here. So that is why I joined, and those are the returns that I get. I like to look at my stock market returns in a mathematical way. We've done some of that together this day, but of course I don't do math around human relationships. I just deeply treasure them. And I know, because I'm always an optimist, and I know you are too, Doug, I know that they're going to get even better, that more returns will be paid. I'll be paying off people, and they'll be paying me off emotionally in the years to come. So part of what I love about LGW is, I think when you join LGW, you're not joining for a year, you're joining for a lifetime. And it's really what you want to make of it. I'm just deeply honored to have been and to be part of LGW as a lifetime member. And I love my new friends.
David, that's very well said. I can't emphasize to people enough that when you join a signature program class and you become part of the class, you will make friends at a level you haven't since high school or college. You will make a ton of new best friends that will be with you for the rest of your life, will be there to talk to you, to advise you, not because they want something from you, not because they're getting something out of it, but because they have your best interest at heart. And that's whatever position you're in, whatever leadership position you're in, you need a group of people like that. You need your Mind Trust, you need your own kitchen cabinet to help take care of that.
Absolutely. And you made that possible. The LGW's made that possible for all of us. And I know we're grateful. And I want to just add to that, Doug, that, especially different types of friends. I am a DC native. So, and Doug, I know you grew up in and around the city as well. And we happen to be white guys. And at least the city, as it was when we grew up, was majority African-American. Today, I think it's about 50-50, with a whole huge melting pot. We've become a cosmopolitan city in the last 30 years, and it shows in our better arts and our better restaurants and all the rest. And so what an amazing journey it's been to be a DC native all the way through. But I have to admit, having gone to Northwest DC schools and churches and all the rest, that most of my friends are and have been white. And LGW has really further diversified me. I've always tried to seek out the other. That's part of why I think I do well at the stock market, because there's no old boys club that you're in when you pick a stock. You're like, I think this one's going to work, but we're going to see. Mercado Libre, it's the eBay of Latin America. Let's see how it does, right? You have to be fascinated by the other. But at a personal level, LGW has given me the other in a way that I'm so grateful for.
Have there been any LGW members that you've reached out to during the pandemic, or have reached out to you for advice, guidance, leadership direction?
Well, numerous. I'll give one quick example, but this is just one example. So my friend Vinard Wright, who is class of 19, and he's also in my Mind Trust.
David, did I tell you 2019 is a great class? I think it is. It really is.
Raising the bar, baby. And Vinard helped me raise the bar, because for my podcast, which again is a weekly podcast called Rule Breaker Investing, it's about 1/3 investing, 1/3 business, and 1/3 life. And I think that's what we've done together today, Doug. We've done about 1/3 investing, 1/3 business, 1/3 life. That's where I love to roll. And the life part, I started deciding, you know what? I need to have an uncomfortable conversation, especially about race and just thinking. And this was middle of last summer, right? When it really felt so important to do that. And so I got to reach out to my friend Bernard. I was like, Bernard, would you do this with me? And we had two other conscious capitalists join us as well. Dan Simons, who I met through the LGW program. We had Entrepreneurship Day, and the founder of the Founding Farmers Restaurant Group, Dan Simons, who's not an LGW guy yet. He just was one of the star personalities for our LGW Business Day. He brought a friend along as well. So 2 black guys, 2 white guys. And we just talked it out in a raw way. And it's right there forever on my 1-hour-long podcast, Uncomfortable Conversations, Volume 1. And so LGW enabled that for me. And Bernard and I love each other, and we had a great time. And, you know, I probably said some stupid things that hour, and it's all permanently recorded on my podcast. But that would be a great, quick example of just one of the ways that LGW has benefited me.
Oh, that's great. That's great, David. Any leadership lessons you've learned over the past 10 months? Anything new that you've learned?
Yeah, I think that I personally, and I think I'm going to speak for all of us probably, but I personally have learned that you need to be ready to change on a dime. You need to be ready for you need to be prepared for the unpreparable things that happen in life. We were musing at the Fool that, you know, if you told us less than a year ago that we were simply not going to be able to see each other, any of us, for the 10 months after that period, and by the way, keep the company alive, let alone that we would be hiring through it all, we would not have believed that. We would have first of all asked, well, why aren't we getting to see each other? What's happened? What do you mean? And we couldn't have expected that or known about that. But we think back on that, and I mean, it's amazing. But what underlies that resilience or ability to pivot? I'm going to go back to that C word, culture, because Doug, I think it's the Motley Fool culture in our case that we've built up over 27 years of people who love each other and people who understand that we're there to make the world smarter, happier, and richer. And so the only question is, how do we do that best? And what should we do next? But nobody's doubting that that's what we're about. And so I think if you have a strong culture, I think it makes you more resilient and better able to adapt. And so I think that's been like the great leadership lesson. I said it earlier. I basically think we're all culture builders as leaders. And so again, we should all be cultural anthropologists, curious about our own organizational culture, and certainly interested in new ideas from others. So I also don't think we're going to lock ourselves into stuff as much anymore. I think we tended to think, you know, this is the way we're going to do it because that's how it is, the Motley Fool. And once you have to undo so much of that, I think you're more receptive and open to further evolving or adapting as needed. So that's for me the big one.
Well, David, thank you very much. This has been an extraordinary conversation. I really appreciate your time. I appreciate you being a member of LGW and being part of that great class of 2019. I want to just let you have the final word today.
Well, thank you very much, Doug. I mean, I would just say to each of you, I thank you for suffering a fool gladly over these 45 minutes or so. My email address is davidg@fool.com. So whether you're an LGW member, a family member of mine, I see at least 1 or 2 out there. So you probably have my email address already, but if you didn't, anybody's welcome to email me, davidg@fool.com. Happy to hear your thoughts back. Got to throw some love out to my class. I see a number of my classmates. Hey, Turkisa. I see some great friends that I've made within the last couple of years. So I hope you enjoyed this time, and let me know if I can help you out in whatever way, shape, or form. And Doug, to you and Debbie, to Danny, Chase, and the team for keeping it all going, because I know LGW itself has had to evolve and adapt. I wish you the very best in that way, one fool to another.
David, thank you very much. Thank you so much. This was wonderful. Folks, we're going to close this one, but stay tuned. We've got more coming up. So check out our website, check out lgwdc.org to find out more programming that we're offering. And please come back and join us. David, thank you.
Thank you, Doug.
Have a great day.
See y'all. Fool on.